All right, let's unlock the market secrets. Welcome back, everyone. Today we're doing a deep dive, really getting into the data from September 5th, 2025. We're going to dissect the signals from four really critical players. We've got the Grayscale Bitcoin Mini Trust, BTC, that's the digital frontier. Then the broader market view with SPY, Tesla, of course, TSLA, always interesting. And the market's fear gauge, the VEX. Our mission, as always, is to connect the dots, find those surprising facts, and help you understand what's really brewing beneath the surface, especially when different data points seem to be telling very different stories.
Yeah, and what's truly fascinating here is how these assets, which seems quite different, are actually deeply interconnected.
Right.
By looking at them together, their performance, the options data, the technicals, we get a much clearer, more nuanced picture of market sentiment.
A better picture than just looking at one in isolation.
Exactly. Our goal is to connect these threads for you, give you that context that goes beyond just the headlines, so you can hopefully anticipate rather than just react.
Couldn't agree more. Okay, so let's kick things off with Bitcoin. Specifically, the Grayscale Bitcoin Mini Trust, BTC. So, September 5th, it closed at $39.44. That was up 1.69% for the day.
Pretty healthy jump.
Yeah, it even pushed past $50 during the day. Now, the 52-week high is a bit higher, around $54.48, but look at this. The one-year return is remarkable, 88.82%.
Regrettable return.
And all with a really low expense ratio, just 0.15%. And here's something interesting, too. Short interest is consistently low, like 488,000 shares, about a day to cover. Suggests not many people are betting against it right now.
And, if we dig into the technicals and the options data, we start to see why that short interest is probably so low.
Okay, tell us.
Technically, BTC is flashing pretty strong bullish signals. It's consistently trading above its key short-term averages, the 5, 10, 20-day EMAs and SMAs, that show sustained upward momentum.
Right.
The Bollinger Bands are actually quite narrow, and the price is hugging that upper band. That often suggests a tight consolidation, near recent highs, sometimes a precursor to a bigger move.
Consolidation before a breakout, maybe?
Could be. And the indicators back this up. RSI, the Relative Strength Index, is at 68.69, firmly bullish. And the Fast Stochastic, the FSTO, is way up at 85.71, D at 78.57. That's very strong, almost overbought territory.
Okay, so clear upward momentum, technically strong. But overbought could mean it's stretched a bit short-term.
Possibly, yeah, that's often the interpretation. But the options data adds this really critical layer. What's truly striking, really striking, is the implied volatility, the IV. It's sitting at 37.45%.
Okay. Is that high or low for Bitcoin?
That's the thing. It's in the first percentile rank, the very bottom of its historical range.
Wow, okay. So the market's expecting things to be really, really calm.
Extremely calm, yes. Especially compared to its historical volatility, the HV, which is around 38.87%, near the middle of its range, the 49th percentile. This divergence is key. You've got low expected volatility, but the price has actually been moderately volatile historically.
So what does that usually mean?
Well, low implied volatility combined with strong upward sentiment, like we're seeing in the technicals, often sets the stage for something our system flags as a convexity breakout.
A convexity breakout. Okay, unpack that for us.
Think of it like this. You have this extended period where the market expects very little movement, right? The IV is super low. Then suddenly that expectation shatters. You get a rapid, almost explosive price movement as the market has to quickly reprice that risk. The convexity refers to how options prices change non-linearly with volatility.
Gotcha. So the market's being too calm and it might snap back.
That's the potential setup. And the options market itself for BTC.
Yeah.
Overwhelmingly bullish. The put-call ratio for open interest is incredibly low, 0.32.
Extremely low. So does that just mean almost nobody's buying puts? Like protection against the downside?
Pretty much. It signals very strong confidence, at least from options traders, that the price is headed higher, and we see that in the volume too. Heavy call volume concentrated at strikes above the current price, like $52. That strike saw 277 calls trade versus only 5 puts. Yeah, and notable call volume at $54, $56, even $59. Significant optimism that Bitcoin will climb past these levels.
Okay, so for BTC, wrapping that up, despite maybe a little dip after hours, the underlying picture, especially from options, looks strong, bullish, almost like a coiled spring. Calm, but with bets on a potential surge.
That's a good way to put it. Low expected vol, high upside bets.
All right, here's where it gets really interesting. Let's pivot from the digital world to a company known for pushing physical boundaries, Tesla, TSLA. So September 5th, TSLA closed at $350.84. It surged 3.64%. Big move.
Huge move, yeah, on massive volume too, nearly 109 million shares.
Right. And a key driver, apparently, was news about a proposed new compensation plan for Elon Musk. Technically, I mean, just looking at the chart, it looks like a rocket ship taking off.
It really does. The technical picture for TSLA is exceptionally strong right now. You had a MACD bullish crossover signal recently, which is powerful, and the price has just sliced through several key moving averages, the 200-day, the 50-day.
On the daily charts.
Yeah, daily, but also weekly. It crossed the 50-week back in August and even the 200-week back in April. That's significant sustained momentum across multiple time frames.
Okay.
And again, like Bitcoin, the RSI is strong, 69.23 bullish zone. The fast stochastic is very strong, overbought again. K at 85.47, D at 81.89. It's been a powerful run.
That all sounds like pure rocket fuel, just straight up. But I have a feeling you've got a twist coming, right? Something under the surface.
There absolutely is. Because what's fascinating, truly fascinating, is the divergence, this huge technical strength versus the underlying fundamental picture.
Okay. The fundamentals. Tell us about those.
Well, Tesla's price-to-earnings ratio, the PE on a trailing 12-month basis, it's at 203.34.
Wow, 200.
Yeah. Astronomically high compared to most companies. And this is where it gets tricky. Estimated earnings per share for Q3 2025 are projected to decline by over 34% year over year.
Decline. Not just slow growth, but actually shrink.
Shrink, yeah.
Right.
And estimated revenue is also expected to dip slightly, about negro 0.8%. Even their Q2 operating cash flow is down almost 30%.
So the core business metrics seem to be heading the wrong way, at least based on estimates.
Exactly. And it even gets a very weak quant rating, one of those systems analysts use for a quick health check. Score of 2.80. Low scores in growth and value, though high in momentum, obviously.
So, okay, we have this total paradox. The stock is technically soaring, sentiment is high, maybe driven by the Musk news, but the core business health, earnings, revenue growth, cash flow, facing headwinds.
Precisely. It's a real disconnect. Yet, despite these fundamental weaknesses, look at institutional ownership. As of the end of June, over 70% of the activity was buy. Institutions are still piling in.
Still buying heavily.
Yeah. And the options data mirrors that bullish sentiment. Call volume, 2.46 million contracts, way higher than put volume at 1.56 million. Clear preference for upside bets.
Where are those bets concentrated?
Mostly around the current price and just above. Heavy call activity at the $350 strike, also $355.5, $360. People betting it keeps climbing in the short term.
Okay. And what about volatility for Tesla? Similar to Bitcoin?
Interestingly, yes. Another recurring theme. TSLA's historical volatility is also historically low. 35.91%. That's only the third percentile rank.
Third percentile. So even for Tesla, which can be pretty wild, recent moves have been unusually calm.
Exactly. Which, again, much like BTC, could suggest a period of consolidation. Or maybe it precedes a return to higher volatility. We should also mention it did dip a bit after hours like SPY and BTC, and there's news of a class action lawsuit, which just adds another layer of uncertainty.
So Tesla is this fascinating battleground, isn't it? Market enthusiasm, technical strength, institutional buying, all pushing against some concerning fundamental trends and a sky-high valuation. What do you make of these conflicting signals? What does this all mean for the stock? All right, let's shift gears again. Let's look at the big picture, the broader market. SPY, the S&P 500 ETF. On September 5th, SPY closed at $647.24. It was down slightly, 0.29%.
It's a small dip.
Yeah, intraday range was about $643 up to $652. And like the others, a slight dip after hours too, down to around $645.96.
Okay, so SPY gives us this really complex, almost contradictory picture, depending on the time frame you focus on.
How so?
Well, if we zoom right in, look at the after-hours technicals, say on a 1-hour chart. It looks kind of bearish. The Bollinger Bands widened out, suggesting more volatility, and the price was flirting with that lower band. Downward pressure.
Okay.
The MACD indicator was clearly trending down below its signal line, negative histogram. RSI was sort of neutral to bearish around 38.96, and the fast stochastic was weak too. Importantly, this downward move happened on pretty significant volume, about 20 million shares in that hour, suggests some conviction from sellers.
So sellers were pushing it down toward support levels.
Exactly. It was testing support around $645, with that key intraday low around $643 being the next major level to watch.
Okay, so short term, after hours, things looked a bit shaky for the broader market then.
They did, yeah, definitely short-term weakness. However, if you pull back, look at the daily perspective, the picture shifts quite a bit.
The bigger picture tells a different story.
Somewhat, yeah. Despite that late dip, the overall order flow for the entire day was actually net positive. More money flowed into SPY, $7.82 than flowed out, $6.61.
Interesting. So dip on the close, but buying pressure underneath during the day.
Seems like it. And SPY is still trading above its key short-term moving averages on the daily chart, the 5, 10, 20-day lines. That usually indicates underlying strength.
Okay. What about daily indicators?
The daily fast stochastic is actually flashing a very strong bullish signal, K at 98.20, but it's also deeply overbought.
Ah, okay. So strong underlying trend, but maybe due for a pullback or consolidation after the recent run-up.
That's a very plausible interpretation, yeah. A short-term reversal from the highs wouldn't be surprising given how overbought it is. And one more thing on the daily, short interest is still really high. Over 116 million shares shorted as of mid-August.
Wow, that's a lot of people betting against the market.
It is. And that high short interest could potentially fuel a powerful short squeeze if the market does turn upwards decisively. Those shorts would be forced to buy back, pushing prices even higher.
Okay, so that's a fascinating tug of war. Bearish on the hourly, maybe testing support, but underlying daily strength, positive flow, and this potential short squeeze fuel. What are the options telling us for SPY?
Well, guess what? Another case of low volatility expectation.
Really, for the whole market too.
Yep. Implied volatility is pretty low, 14.99%, that's the 18th percentile, and historical volatility is even lower, 9.66%, only the 15th percentile.
So both what the market expects and what has actually happened recently point to low vol or maybe consolidation.
Exactly. Suggests the market is pricing in relatively calm waters ahead compared to historical norms. Now, the volume put-call ratio was basically balanced, 1.00, but if you look at where the volume was by strike price,
A lot of details matter.
they do. Puts were slightly favored at strikes below the current price, like $645, $646. So some bets on a further dip, but calls were favored at strikes above the current price. So also bets on a move higher. It's a split decision within that low vol outlook.
A split decision. Okay, so SPY. It's this mix, isn't it? Short-term bearishness, underlying daily bullishness, positive flows, potential squeeze fuel, all wrapped up in this historically low volatility environment. It really does feel like the market is holding its breath.
That's a great way to describe it. Which brings us perfectly to our final piece of the puzzle, the VIX, the fear index.
Right, the VIX. What was it doing?
On September 5th, VIX closed at 15.18, down slightly, 0.78%. Intraday, it ranged from about 14.74 up to 16.92.
Okay, 15.118. I mean, generally people start worrying when VIX gets above 20, maybe 25. So 15 sounds pretty calm.
It does sound calm on the surface, and that's precisely what's so incredibly telling here. It creates this dramatic contrast with everything else we've seen.
Oh, so.
The VIX itself appears calm, right?
Oh.
Trading below 16, slightly below its moving averages. MACD, RSI, they're all pretty neutral. The surface looks tranquil.
Okay. But you sound like there's a but coming.
Oh, there's a huge but. The options data for the VIX tells a dramatically different story, completely different.
All right, let's hear it.
We see extremely bullish sentiment for the VIX itself. The volume put-call ratio was a mere 0.21. The open interest put-call ratio, 0.41.
Whoa, 0.21. That's incredibly low. So people are betting heavily that the VIX will go up.
Exactly. A very strong bullish bias for VIX. And remember, a rising VIX means rising fear, rising expected market volatility. So bullish VIX bets are actually a bearish signal for the broader market.
That's a massive distinction. So while SPY options are pricing in low voling, VIX options traders are betting on fear returning.
Betting heavily on it. And this is where it gets really extraordinary. Look at the call volume distribution by strike. The single most active options strike across the entire market, pretty much, was the VIX $35 call.
$35. The VIX is at 15.
Exactly. Over 368,000 contracts traded at the $35 strike, and every single one was a call.
No puts at all. Just pure upside bets on VIX doubling. More than doubling.
Pure upside speculation. And we see other notable call-heavy strikes way out there, too. $60 calls, even $110 calls saw significant volume.
Wow. That's not just hedging. That's betting on a serious volatility explosion.
It points to a high level of speculation on an extreme, out-of-the-money volatility spike. So while the current VIX level looks calm, options traders are actively positioning, betting big bucks, on a significant, sharp increase in volatility down the road.
And does the probability analysis back that up?
It does suggest a move higher soon. The models show an over 80% chance of VIX being above 16.70 just by September 10th. And that 16.70 level is often seen as sort of a threshold, a trigger point where hedging might really kick in.
So, okay, The VIX itself looks sleepy, but the options market underneath is wide awake and betting on a storm. Some traders are definitely preparing for choppy waters.
And that right there, that ties all these deep dives together, it forms this really cohesive narrative.
Let's connect those dots then.
Okay, we've seen this recurring theme, right? Unusually low implied and historical volatility across Bitcoin, Tesla, and SPY.
Yeah, calm expectations everywhere.
Suggests market complacency, maybe consolidation. The market surface expects calm. Yet, contrast that directly with the VIX options. Traders there are explicitly anticipating, even betting heavily on, a significant increase in volatility. Extreme upside moves for the fear index.
There's a huge divergence.
It's critical. So what does it mean? Are we seeing that setup for the convexity breakout in BTC, where low high V snaps into a rapid move?
Could be.
Will TSLA's strong sentiment hold up against weak fundamentals if broader market volatility does expand, like the VIX options suggest it might?
Good question.
And how does SPY navigate its own mixed signals, that daily strength versus hourly weakness, if that VIX prediction comes true and volatility picks up across the board?
This is exactly why connecting these different assets and signals is so vital. You get this comprehensive sort of aha moment perspective that you just don't get from isolated headlines. It really helps you think ahead, anticipate, rather than just reacting to whatever happened yesterday. So looking across all four, BTC, TSLA, SPY, VIX, what stands out to you as the most critical takeaway from this whole fascinating set of divergences?
For me, it's really that profound contrast. You have three major distinct assets: crypto, a high-growth tech stock, the broad market index, all pricing in low future volatility. Almost complacency, you could argue.
Right.
But then the options on the fear index itself are screaming for potential extreme volatility. It highlights this deep undercurrent of maybe hedging, maybe speculation, certainly anticipation, that the broader market isn't fully reflecting yet in its day-to-day price.
Like a hidden tension.
Exactly. It's a powerful reminder, I think, that sometimes the market whimpers its intentions before it shouts.
Yeah, absolutely. Okay, so we've unpacked a truly fascinating set of market signals today. We went from the strong bullish undertones in Bitcoin, potentially setting up for that breakout, to the really complex dance in Tesla between red-hot sentiment and, well, questionable fundamentals. Then the mixed signals in the broader market, SPY, with that low-vol tension. And finally, this intriguing calmness before the storm picture we're getting from the VIX and its options.
And if we connect this to the really big picture, this deep dive raises a pretty important question, I think. When the market appears calm on the surface, right, and expectations for future volatility are low across many, many assets, yet at the exact same time you see these huge concentrated bets on extreme volatility in the VIX. What does that tell us about the hidden currents, about what's really going on beneath the surface of market confidence? It's just a powerful reminder, I think, that the market often whispers before it shouts. You have to listen closely to all the signals.
A really powerful thought to end on. Keep those insights brewing, everyone. Remember, the more we look beyond the obvious headlines, the more clearly we can hope to navigate the complexities of the market. Until our next deep dive, keep learning, keep questioning, and keep exploring.